Welcome to week 8 of tax season, everybody. I can't believe it, but we're just a little over halfway through. I know it still seems like it's a ways off, but those deadlines are looming and they'll be here before you can blink. So be sure you're on top of things and giving your tax preparers plenty of time to make sure that you can have your taxes filed on time. For our office, that turnaround time is about 2 weeks. So that's generally my recommendation for everybody, is to make sure you have your stuff to your tax preparers at least 2 weeks prior to the deadlines or when you want them filed. All right, so last week I talked about mileage, and this week I'm going to be talking about its sibling, auto expenses. They are not mutually exclusive. These are two items that are very directly related to each other. And one of the big questions I receive from people when it comes to mileage is whether it's an auto expense or a travel expense. And honestly, when it comes to the bottom line, it really doesn't matter to me. But technically, mileage is an auto expense because that mileage rate is intended to cover all the costs that go into maintaining your car that are associated with your business travel. So those kinds of expenses include insurance, it includes oil changes, repairs, major repairs, fuel, all kinds of things that go into maintaining your car. So of course, the next question is which one should I be tracking, mileage or auto expenses? The answer is both. I know it seems crazy, but there are a couple of different reasons for that. And the first reason is that it's up to me to decide which one gets you the best deduction. Is it going to be the mileage or auto expenses? And most of the time, to be perfectly honest, I would say more than 95% of the time, it's mileage that gets you the best deduction. But there are times when fuel rates are significantly higher than the mileage rate is allowing, or you may have a major repair that was done on your vehicle that is going to factor in all of these things. That makes the auto expenses make the most sense. So that's why I usually ask people to track all of their auto expenses as well as their mileage. Now, the second reason I want that mileage tracked is the fact that it allows me to determine what proportion of your vehicle you're using for business versus personal. And that's because hopefully you are tracking all of the mileage driven throughout the year. And then I know which part is personal and I know which part is for business. And I'm able to determine, are you using it for 30%, 40%, 50%? That's important because in the end, if you are using your vehicle for more than 50% business, then there is some depreciation that I may be able to take on that vehicle so that we can squeeze a few extra deductions into your tax return. And then the last reason I think it's really important that you are tracking both is that if we do decide to take the auto expenses and decide that that's the better option for you, at some point in time, you may get audited and the IRS wants us to prove somehow just how much of that vehicle is used for personal versus business. And it's a lot harder to track that with just submitting the auto expenses. Whereas with mileage, generally we have a report that shows us how much you drove and how much you drove specifically for business. And it gives us a nice, pretty report we can give to the Internal Revenue Officer that proves that we were taking the auto expenses appropriately. So 3 big reasons for making sure that you track both. And no matter what, tracking that mileage is still important. All right, pretty short video for today. Next week, we're going to be talking about dues and subscriptions. This is another area that should be cut and dry, but it is a little bit confusing as to what is actually a dues and subscriptions expense. So we're going to talk about that next week. In the meantime, y'all, we'll talk to you soon. Feel free to contact me if you have any questions. Take care.